Hey everyone, welcome back to the Daily Gold Podcast. We have a special guest today. No stranger to any of our listeners, I'm sure. He's Dave Morgan of silver-investor.com. He writes the Morgan Report. You can find him again, silver-investor.com or themorganreport.com. Dave is really, for my money and for many others, the world's foremost authority on silver. And obviously, knowing silver, he knows a lot about gold as well. Dave, it's a real pleasure to have you back. How are you doing today?
I'm doing quite well, thank you.
Okay, let's get right to it. We did an interview in 2009, and I don't remember what the price of silver was. I think it was below 20, maybe around 15 or so. And you noted how important the $25 level was, and how when the market broke that level, it would really be a significant turning point or inflection point. Clearly, you were right about that. We saw share prices and interest in silver really exploded. So, I presume that the $50 level is the next important level. And what do you expect when silver breaks 50? Could that be when the speculative phase begins?
Well, great question. And just to backtrack, I did predict 25, and that was based primarily on the charting of the commodity silver over years. It was, a 20-year chart. And even though silver had hit 50 intraday, for all practical purposes, anyone around the $25 level was holding at a profit. So the most stubborn bull out there in the world that bought it at, say, 30 or 25 was holding it at a break even or at a profit. So there's nothing more bullish for a stock or a commodity than a new high. Now, granted, as I just said, 25 isn't 50, but it was so few days that silver traded above 25 in the last bull run. I'm not talking about the current bull market. I'm talking up until January 21st, 1980. So few days that it actually traded above 25. Again, all practical purposes, that was a place where everybody that owned it was holding it at a profit. And I was accurate there. It was a educated guess, you might say, and things really took off. Another event happened at the same time which no one could have forecast, and that was that Bernanke came out and announced QE2. Well, when QE2 was announced, silver was actually a couple days before that starting to sell off and show some weakness. And I was actually thinking about putting a stop under my trading position. And then QE2 was announced, and it just basically went straight up for several months after that. As far as the $50 price is concerned, I haven't looked at it that hard, but I think psychologically it's very key. We both know that. That's the barrier. It's already stalled out at 48 on this last run. Did that May 1st, 2011. I was lucky enough for the people that follow my over-the-shoulder service, my advanced service, and said, I'm getting out at 48 for the speculative portion of my portfolio. I'm holding the core position. Don't touch your core position, but if you trade like I do, this is where I want to exit. And when I did that, there were a lot of people that others would know in the industry. Some are very well known, and some were giving me information that don't call a top, you're not bullish enough, it's going far higher, and on and on. But, I listen to these guys. They're my friends, and some of them are pretty good technicians, and there's lots of positive things to say about these people, but I am my own man, and to me, it looked like exhaustion was around the corner, and I've learned the hard way. Sell into strength, don't sell into weakness. Don't wait for the exact top. It's a lot harder to sell on the way down than on the way up. So luckily we exited within a couple of days, 3 days or so within the exact top, selling in the strength. There was still a lot of buying pressure still in there for the last few days, and the rest is sort of history. So back to your question. I think once we do reach the $50 level, the psychology is going to be phenomenal. I think everybody that's been holding all these years and people that have been holding at the $30, $35, $40 level are going to get excited once it reaches 50. So I think you're right. I think that psychologically, I can almost guarantee that you and I are both correct. As far as what the market will do, it's always hard to forecast, but I think you're right. I think you'll see 50, 55, 60, 65. I think once you're above 50, you could see 65 within a matter of 3 weeks. And where it goes from there, is that the speculative blow-off phase or not? That's even more important question. And my answer is, I don't know. I have to wait and see the market at the time, but from where I sit right now in February 2012, I doubt it. And the reason I doubt it is silver is so volatile and it can get so exciting, and there's so many momentum players, especially the hedge funds. They know how to work the market. they'll see it go, and it'll go, just for an example, 50, 60, 65, 70, stalls out again. Maybe it retests the $50 level and comes back off of that. I don't really see the blow-off speculative feeding frenzy that's going to make the last bull market look like a warm-up parade. And believe me, it was extremely exciting because I was in it in those days, and I was in my 20s when it happened the last time. I don't think we're going to see that once we reach the 50 level. I think we'll get a lot of excitement. I think it'll be kind of a precursor to what the ultimate blow-off is going to look like, but I don't think it'll be ready at that time. I'm looking for the final blow-off rally to be more something along the lines of like 85 to 165 or something like that.
Okay, now let's take that and turn to the stocks. And I'm sure you noticed this, on the past 6 months or so. Now, relatively speaking, like I want to talk to you about the strength of the silver stocks against silver itself. Now, that relative strength, I'm looking at a chart right now. That's actually turned down in the last week or two, something like that. In other words, for listeners out there, silver has been stronger than the silver stocks. Yet, I mean, if you look at a relative strength chart, over the past 6 months or so, the silver stocks have actually performed better than silver. And I mean, I'm sure you like to see that. I really like to see that. And I mean, I don't know if you agree with this, but some of the technical work I've been doing in the last 6 months or so, I believe that if we can get silver above $40 an ounce, that a lot of these stocks are going to break out to new highs and really start to run, before silver gets back to 50 and breaks above that. I mean, do you see that happening? Is this something, I mean, I'm just asking. I'm not sure if it's something you've been watching or not.
Well, it is. I do a great deal more technical work than I talk about because I choose to emphasize the fundamentals. Most people can grasp the fundamentals. Technical work is something that, one, is hard to do on radio, and two, it's a bit esoteric. I mean, not everybody agrees, with what the most important indicators are, et cetera. But facts are facts, and you're right. Silver's actually done fairly well on the stock side. I do agree. I think that most cases in past bull markets, gold stocks led gold. That hasn't been the case for some time. There are exceptions. I mean, one of our top gold picks has done quite well. A lot of our stocks that we pick, and we don't like long lists, have done very well relative to what, let's say, the general universe of these mining companies have done. Regardless, I believe you're correct. I think when you get 40, I think it's a good benchmark, the 40-ish level, that you'll probably see some of these making new highs, and as you said, they'll actually be leading because they're making new highs, and silver at 40 is not making a new high. So I agree with you. I think that it's a place that is appropriate for a lot of sophisticated investors. I have a lot of people that are bullion only, or all they want is coins or bullion. They don't want anything to do with any paper market, and I appreciate that. But the leverage still is in the underlying mining equities, and for people that are late to the party, that want to catch the people that bought gold at $2.50 and silver at $5, the way to do that is to do it through the leverage of a mining company and picking the right ones. And if you do that, you can buy silver for the $1.20 in the ground and have a lot of upside. So I'm not suggesting that you only do mining shares. I've never advocated that, just to be consistent for you and everyone else. I've always stated you should have physical metal first before you go into the mining equity part of a portfolio. Nonetheless, I think that's probably the most undervalued part of the precious metals industry right now.
And I'm glad you mentioned the stocks because that comes to my next question. When we did some interviews a couple years ago, you were talking about how much you really liked the junior producers. I mean, I guess they're not really junior producers anymore, but I think we're talking about, the First Majestics, Endeavor Silver, Fortuna, et cetera, that kind of group. Now, a lot of those stocks have had a tremendous run. Their market caps are much bigger. You can't really consider them juniors anymore. Over the next few years, which group of companies do you think will perform best? Now, for example, I mean, could it be the speculative explorers who make a huge discovery, or might it be the current small producers who are, maybe producing around 1 million and they're able to grow to 4 or 5 million ounces?
Well, great question, and I think it's going to help your listeners a great deal. First of all, you're right. I mean, we had emphasized in 2011 that I said I wanted to really focus on the mid-tier growth companies. It was my favorite model. It's where you had the ability to add to the bottom line two ways. You could increase production and also cut costs if you got a better situation of making a mine more efficient. And then on top of that, you had price appreciation, and lastly, you had some ability to continue exploration and build the asset base. And like First Majestic, I mean, we sat on that stock for a while at 408, and yet it was worth the wait because once it went, it really, really went. I was on BNN and asked, what would be one of my favorite stocks. I mentioned First Majestic. I'm not saying anything to do with it. All I do know is a fact is a fact, and after that interview, this stock started to get some momentum and basically never looked back. It was very much undervalued. Of course, it's an NYSE stock now. Where do I think in the upcoming next phase of the market? I think you're probably in the smaller producers that have the same ability to do what the mid-tiers have done. So those three you named are good examples. There are a few out there, there are not many, that have the ability to do that. We have one or two on our list that I think will be able to do that over the next couple of years. But I want to continue. I'm going to add on to your question. Where do I see the most money flowing at the end of the cycle? And we've already touched on this once before, like, what's the ultimate price of silver? Well, the answer is no one knows. When are we going to get the blow-off rally? Again, no one knows. But I'll give you some general ideas. I really think that the final blow-off in silver and paper dollars relative to a 2012 dollar might be well north of 100. I mean, we could be talking 165, 200, I don't know. But it's significantly higher than the 35 we're at now. I'm talking like 5 to 7 times higher. The stocks obviously are leveraged, so some of these stocks will probably go up 10 or 20 times from where they are right now. But the stocks that do the best in the mania panic buying phase are the worst stocks you want to own, and that's the truth. And I base this on my own historical experience. It may not happen this time, but it's the way I'm going to bet. But we're already working on a strategy called the sacrifice fly. Anyone that's familiar with baseball at all knows the sacrifice fly is something that's a long pop ball up so that you can get a runner to advance, but you're not betting the farm on it. It's for a specific purpose for a very short duration. And that's the way you want to play your speculative money at the end of this bull market. So let's say it's 3 years away or 4 years away. What's going to happen, in my very strong view, is that all of the Johnny-come-latelys, all the people that realize the stock market's going nowhere, their 401k isn't going to do anything, the pension plan that they thought they were going to have for the major corporation isn't going to be there, the Social Security system is paying checks, but they barely pay the light bill. Dream up any scenario that you want, but that's realistic, and I think all those that I outlined are realistic. And these people are going to get a great big light bulb that goes on over their head, and it's going to say gold and silver. And that light bulb is going to get these people into the market without any rational thinking at all. It's going to be based 100% on emotion. And the emotion is going to say, I am going to die financially unless I buy gold and silver. So what those people will do in the vast majority, on balance, on the aggregate, is they're going to come in and they're going to buy every cheapest stock they can find that has gold and silver in its name. And about 99.9% of those stocks are going to be moose pasture. They're not going to be worth anything. They have no merit whatsoever. It's going to be extremely similar to the dot-com bust. Remember the dot-com bust. Those were companies that had no business plan, no assets. It was how many eyeballs were watching them. Well, that is a precursor, I think, to what's going to happen in the gold and silver space, because people are going to try to play catch-up. People love cheap stocks. People don't use reasoning at a mania. They use emotion, and there's very few gold and silver companies. So I really think the small exploration companies that did so well between the year 2000 and 2005, anything along those lines are going to do equally as well or better between guessing a number between 2014 and 2016.
Dave, it would be perfect to end on that question, but you're such a source of wisdom and experience that I have one other question that I want to ask you, and we're backtracking a little bit in regards to the stocks, and I ask you this because you have the experience that many others here do not. I'm just wondering, because most of these companies are Canadian companies. They start out in Canada on the venture. Maybe they go to Toronto and then they go to the Amex or the NYSE. I guess, maybe I'm having trouble formulating my question, but I'm just wondering how much, because obviously in the next few years there's going to be more mainstream money coming in. Do you think that is going to benefit? I mean, relatively speaking, is that going to be far more of a benefit to the companies that are already listed in the U.S. than the ones that are trading on the pink sheets?
Absolutely. No, I think that's a great question, and this is the way I see it. The Pan Americans, the Silver Standards, the Silver Wheatons, these market caps that are in the billion-dollar category right now, they'll act like a penny stock normally does in the next few years. And the reason being that the panic that I just described for the late comers, that's already starting in the managed money. And if there's one thing I've learned recently that's very important for this market, and I mean this market meaning the precious metals markets in all phases of it, the physical market, the share market, the ETF market, the futures market, the options market, anything to do with the metals themselves, precious metals I'm speaking, not base metals, is that managed money is starting to wake up. So professionals are starting to come in. Well, professionals can't buy a junior mining company. One, they're restricted from doing it. Two, they have too much money to deploy. So they're going to deploy it where they can. Well, they're really only, on a hand or maybe two hands, legitimate producing silver companies whose main asset is silver. I mean, surely you could go to BHP or RTZ or one of the big mining houses that have huge base metal production and get some silver exposure. But that's not what these guys will be looking for. They'll be looking for silver exposure. So I think you're going to see those large cap companies do quite well. Now, I'm not talking about 20 baggers or even 10 baggers, but I'm talking about substantial moves, maybe 4 or 5 fold from where they are right now over the next 5 or 6 years. I think you're going to see that. And those kind of companies, again, can only be purchased by this, professional managed money. So then where do you go? And the obvious answer is as an investor, you want to outsmart them. You want to be in companies such as, let's say, Endeavor Silver, where you can be bought out by some other larger entity. Look at Pan American, just bought Mindfinders. We had Mindfinders at under $1, and we sold it at $13 as a speculation. And if you look at the chart and you see when that was done and the time frame that was done, I mean, I called that one almost perfect. I don't get them all that well, believe me, but we do pretty darn well. And that was one because I know what the mining cycle is. And that took a long time for that company to become a mine and get back up to that price. So we backed off of it because I know the mining cycle, and I thought that the money could be better deployed in other investments. And actually, that turned out to be true. But I'm very bullish, as you can tell. I do think you have to have a long-term time frame. I think timing markets, which is something that I do, but it's very difficult. It's not for everybody, and it's not really the way to invest. Invest is to get on the major trend, buy and hold, keep adding your position on weakness, and wait for that final blow-off. When the final blow-off comes, it's going to be tough on me because, one, I got to call a top. That's extremely difficult. And two, that's going to be similar to what I said a moment ago at the beginning of the interview, and that's when silver was approaching the $50 level. And a lot of my, very good friends were telling me, no, don't call a top, and you're getting too bearish, and, no, you're going to look wrong, and you're going to hurt yourself and hurt your reputation. Well, you know what? That all could be true the next time. I don't know. But I absolutely have to be true to myself and true to my subscribers. And if I see it getting too frantic, too frenzied, even silver and gold can get overvalued. I did that lecture recently here at the Palm Springs Cambridge House conference just a few days ago, and I said, look, what you really want to look at is what is the purchasing power of an ounce of gold, or the purchasing power of an ounce of silver. We all have heard the mantra too many times, really, that an ounce of gold is good for buying a fine man's suit, shirt, suit, umbrella, shoes, socks, the whole bit. 1 ounce of gold, you get really decked out in an outfit, a classy outfit, okay? Well, if you see that an ounce of gold buys 10 of those, I would suggest that gold's overvalued relative to that suit purchase, or maybe an automobile purchase, or a land purchase. So I think that's what people should focus on, because everyone's exit strategy has to be make sense. But the basic thing is it overvalued or undervalued? Right now, gold is not even fair valued; it's undervalued. Silver's not even close to being fair valued; it's undervalued. It will get to be fair valued. Fair value for gold is anywhere between $2,500 and $5,000 the ounce. fair value for silver is probably anywhere between 135 and 160 an ounce. So those are paper prices that are, variables because it changes so quickly. But those are some ideas to think about. And then, of course, you want to look at the overvalued area. When it is overvalued, then, each individual should really have their own exit plan. Pay down debt, buy a second home, retire, buy a business. I don't know. That's an individual choice. But when the time comes, you really want to have a plan of action that you can exit this market and do yourself the most good, because even gold and silver can get to a point where they become so valuable that the market, values them or prices them at a level that it might be smart to, take some profits.
Now, before we close, Dave, why don't you tell our listeners about your services? I know you offer several different levels of your service.
Well, great. I'd be happy to. First of all, it's, as you said, themorganreport.com. It's all one word, themorganreport.com. And anyone that's interested in what we do, I would say just get on the free email list. We have an autoresponder that will respond to you over the next few weeks. It'll give you the 10 rules of silver investing. These are rules that I wrote over a decade ago. And they actually apply not only to silver. There's some common sense rules for investing in general, but they are, most of them are specific to the silver and gold markets. And then we also put out a weekly economic update, and all that's for free. The basic service is a monthly newsletter that's based on the internet. You come in, you get a password and a username that's unique to you. We've never failed to meet our deadline, which is the first Monday of every month. You just log in from anywhere in the world. You can read the report, download it, print it out, whatever you want. There's an advanced service, which is more for timing and a deeper look into the market, and I do that by film. I do a look over my shoulder service to show you how I've seen the market set up, what I might think is a good setup for a trade or a position trade or something generally in the market that I think people should understand. And that's done in video format, and yours truly narrates it. And then there's a service beyond that, which is $1,000 a year, which is basically for hedge fund managers or high net worth individuals, and they pretty much dictate what's done on a monthly basis. Sometimes we have unique interviews like Eric Sprott or John Emery or a Mike Maloney or a Nick Barishev. Sometimes we have a unique stock situation that we like. Sometimes I do it myself and just point out certain things in the market. Sometimes there's a Q&A format. But again, that's, fairly pricey, but, it allows you to get, one-on-one with me, so to speak. So those are the three levels of services. They're all spelled out in a video format. So if you wanted to know what each one actually does, you could use the drop-down menu on the right-hand side of the website and watch the video. You'll get a bit better, probably, explanation than I just gave you over the radio.
Well, Dave, we follow hundreds of analysts in our industry, and for my money, are in the top 5. And I love the work that you do. Like I said, you're a source of wisdom, and you have the experience that most people do not. And I like how you blend fundamentals and technicals. It's a real great balanced approach. So thanks so much for your time today, and we look forward to having you back soon.
Well, my pleasure. It was a great interview. Thank you.